Good afternoon, YouTube. Stocks by the numbers. Today's Wednesday, the 19th, as per request. Shout out to Specs Bundy, I think his name was. He wanted us to take a look at InMode here, so that's what we're doing. Taking a look at InMode, ticker symbol INMD, listed here on the NASDAQ. Stock 3709, up 80 cents, 2.2% here on the day. About a week ago, the company had a little bit of a pop in raising its guidance. If we pull up here, just looking at a 1 month chart, you can see the little jump here going from the low 35s up to almost about 38.5, and then just kind of bouncing off. Looks like some people are taking profits there. We go our 1 year chart and we back out and we can see 2019, and then of course the company really ran up and exploded to almost $30 and then crashed down to about 6.5. This is again when the shit hit the fan, and then went on an absolute tear, $100. They did a stock split here, 2-for-1, back at the end of 2021, and has since been bouncing around, but slowly rising here in the short term for the last, we'll say, about 12 months. So we came down, brought it down to about 20, and have since been rising. So this is the top trend line, and this is the bottom trend line, long term, of course. And as we see, I made them different colors for you guys so you can tell the difference here, but this is widening again. So this is basically forming our trumpet pattern like we always see, and what that tells us is that it's not really determined whether it's going to remain climbing and bullish or if it's going to pull back and begin to trade bearish. But what we can see here is that coming off of these highs and this tight little channel that we're in, again going back roughly 12 months, we could say that we are kind of in an ascending wedge here. And what this shows us is if the stock hypothetically keeps this trajectory, we can call this our apex. As we can see at the bottom of the screen, it's about 6 months from today. So if the company remains on this path, we will see some growth. You know, you have what, like 12.5%, 13% here from this level if you stepped in. If it goes to 42, 43 as it says, and then when it hits that apex, it will most likely pull back all the way back down to this fib here, 25.75. But more importantly here, even though inside of this wedge you have this long-term trumpet, and if we zoom in here, you can see this one top I pulled down, and the second top is where I pulled down, and now we're in this diamond pattern that it seems to be bouncing around here. And as we see, yes, it did pop recently and it has been slowly pulling off. And if we go to this candle and we look at our top left, we have the O, the H, the L, the C. Again, that is the open, the high, the low, the close. And as we see, the high, incidentally, is 38.38. And our fib level is 38.38. So not only did it reject off this fib, but it also rejected off of that top trend line there in this pendant, and has since been pulling back. Gaps always fill, so it gapped up a few dollars, and that's why it's slowly pulling back now to fill that gap. In my opinion, though, I mean, I like it at 37, but if I can get it here at this fib of roughly 32.06, that would be a much, much better entry in my opinion. And I do feel they may potentially pull it back down towards that level before maybe running it up a little bit going into these earnings. As we tell here, these earnings are coming in roughly 2 weeks, coming out here Tuesday, May 2nd. Estimates of 46.8 cents a share on the EPS side and a little over 101 million on the revenue side. However, if we back up and we look at some previous quarters, you can see phenomenal beats on the top and bottom line across the board for every single quarter since going public. This was our one miss there on the EPS side. However, back at this time, revenue 40 million, 30 million, 59 million. Now we're up to 113, 120, 130 million. So again, this company is consistently beating here on the EPS side. Market cap, we'll call it 3.1 billion. We have a PE of about 19, so you could say that maybe it could run a little bit higher, especially since it's just consistently beating earnings. And even though revenue over the years has gone from 100 million, here 2 years later 200 million, now 2 years later almost 500 million. However, again, 450 million, company's worth 3.1 billion. That's a pretty high multiple. That's roughly 6.5, almost 7 times. So the company could definitely pull back down a few dollars here. That would be 100% justified. But healthy profit margins and growing business, right? So you can't deny that the stock ran a little bit. But this company is in the cosmetic medical industry, as we see here. Develops, manufactures, markets minimally invasive aesthetic medical products. Also design, develop, and markets non-invasive medical products. And steam friend. And procedures including permanent hair reduction, facial skin rejuvenation, wrinkle reduction, cellulite treatment, right? So everyone wants to remain 20 and beautiful even when they're 50 and 60. So that's why everyone's going in, getting these procedures, keep it young, keep it tight. And, a situation like this, a company that offers this type of medical treatment to tell me that they're consistently growing and beating revenues, it kind of makes sense, right? Company based out of Israel, and I don't want to go down a rabbit hole, but if you look, coincidentally, if you look up a lot of these publicly traded Israeli companies, I'd say about 9 out of 10 of them are kicking ass and taking names. So usually they are phenomenal names to own, and usually most of them have just consistently growing balance sheets and businesses overall. But right here again, this company really seems to be doing some good things, but is trading at a little bit of a high multiple here, in my opinion. I definitely would try to get that $32 mark as opposed to stepping in here at 37 if possible going into earnings. But again, we have the revenue growth over the years, as we see here in the U.S. just over the last few years, a little over 100 million now, about 300 million, and of course doing business in Europe and the rest of the world, slowly growing. We come down here, though, and we can see that the company has come in above estimates for the last 4 years in a row on the revenue side and come in above estimates for the last 4 years in a row on the EPS side, going from estimates, look at this, of 76 cents a share, and just 3 years later, estimates of 231 a share. That's a 200% climb in profitability over 3 years, and they came in above those estimates by almost 5%. That is definitely nothing to sneeze at here. Company has millions of dollars in cash right now that they're holding. The debt increased from low 1 million up to about 5 million. Definitely not an issue. The debt is not outweighing cash on hand or any profitability at all. The company's holding assets of about 650 million with liabilities of only about 90 million. So the assets to liability ratio is absolutely phenomenal. Switching over here, we'll look at the balance sheet here, and as we see again, assets consistently climbing, liabilities of course climbing as well, but definitely not as much, not raising a red flag for me. Debt only a couple of million again, but look at the book value per share, 672. So that's why I'm saying, is it going to crash down to $10? Probably not. Could it pull back from 37 to even 27? That would be a massive drop and would be extremely advantageous for the individual investor, but I really don't know if they're going to bring it that low, inside of, the next month or so. Unless the company, again, coming out of this pendant formation, if earnings on May 2nd are dismal and they happen to miss, then they're probably going to crash the stock because the whole time they've overinflated it and kept it overvalued. So if the company does come in with an earnings miss, they will now break any formations and they will bring it down drastically back to earth and make it much, much more fair valued. But, based on the history, the earnings history of this company, chances are they're probably going to come in and at least meet or potentially beat those earnings. But the good thing is here, as we see over the years going from 100 million up to north of 450 million in revenue, the cost of goods, it has increased, but just very, very slightly, right? It is so rare to see a company where the cost of goods is just a small fraction of the revenue that they're bringing in. And even looking at the operating expenses here of a little over 180 million off of their 380 million profit that they clear, you can still tell that the company is sitting here with almost $200 million of operating income. So everything is looking pretty good for the company here. They have healthy profit margins. Revenues consistently keep growing quarter over quarter, year over year. We switch over here. We look at some of our stats. And as we see here, the PE sitting here at about 19, not the highest it's been, not the lowest it's been. But again, we're in a pattern. We're bouncing around. We're waiting for these earnings. Price to sales roughly 7, 18 times cash flow. Again, as we see, these numbers have been much higher and also a little bit lower, so nothing really determining for us here looking at these metrics. But again, trading almost 5.5 times book value, that's really the only red flag I have. Plus, for all of you who are kind of hating on me now for saying it should pull back a few dollars, right now the company has a valuation $3.1 billion, and to buy out the company, it would cost $2.5 billion. That's what the enterprise value is. So that is what? Roughly $600 million, right? Because they're worth $3.1 billion, but to buy them out would be $2.5 billion. So that's a difference of $600 million on $3 billion that the company's worth, which is 20%, which is 1/5, which is roughly $7, which means I could buy this hopefully at $30.09 instead of $37.09. That's my point. That's my point. That's why I do these things for you guys. Coming down here, just look at the profitability ratios very quickly. The return on assets, equity, and invested capital slightly pulling back here. However, again, the company rocking and rolling. Look at our gross margin, just maintaining that 80+% mark. Absolutely phenomenal. With the operating margin was in the high teens, jumped up to the 30s, almost 50%. Pulled back a few points and has since rebounded back up to almost 45%. Same thing with the EBITDA. Once again, earnings before interest, taxes, depreciation, amortization was in the high teens, up to the 30s, up to almost 50, pulled back to 43, now back to 45%. The net margin percentage we looked at before had phenomenal climbs, and then of course had a slight pullback here, but still sitting here at almost 30%, right? So again, this company is consistently increasing revenue every quarter, every year. They're remaining profitable. They have barely any debt on their balance sheet. So everything really seems to be aligning here for this stock. But again, I do just want you to tread lightly because I do not know if I personally, in my opinion, would be 100% convinced here at 37 when I could probably get it on this pullback here at the low 32s. And look at this. We have a fib level here of 32.06 that it can easily pull back down to, right, and stay inside of this pendant going into these earnings. 32.06. And now we switch over here. We look at the weekly on stock charts, and we can see this tightening taking place over the last several months. However, the company has been extremely stable here, going back roughly the last 6 months, maintaining this level above this 50-day moving average, which incidentally right now is, excuse me, which right now incidentally is 32.05. So we have a potential fib pullback to 32.06. We have a 50-day moving average that we probably are going to retest here at 32.05. So that's why I'm saying it will most likely pull back a couple of dollars, and you may be able to get a slightly better entry. This is the highest the RSI has been going back to the tail end of 2021. So based off how the stock has been trading, you know, since it made a little bit of rally here in the short term, it could definitely pull back and sell off a couple of dollars here in the next week or two going into earnings. And switching over here on the daily, we can see the stock ran up the RSI of 70 and has been kind of maintaining that level, but just slowly selling off, pulling back, coming back down to earth. I'm sure a handful of people taking profits there. Again, slight gap up, and they usually fill. So, you know, it'll probably come back down there to the mid and low 30s. And you can also see here on the daily, look at this, our 50-day, 33.98, and our 200-day here of 33.49, all meeting up at the mid-Bollinger Band of 33.30. That's why I'm saying it will most likely pull back, bounce around, retest these supports. But if it can break and get to that $32 mark, that would be phenomenal in my opinion. And of course, the MACD has been absolutely raging in the last couple of weeks. The market bounced off those bottoms. Everything had a nice little rally for a few weeks, and then the company came out, raised guidance, so they took another leg higher. So what we just need is these metrics to just pull back and sell off a little bit and just come back down to earth. But overall, again, we're talking about beautification, medical industry, company based out of Israel. Business consistently keeps growing. People want to be beautiful. Revenue keeps increasing. Company's extremely profitable. So, you know, in my opinion, I would say it's a buy. However, again, I would try to get it for a few dollars cheaper. And also, I want to show you guys something. This is the low. Supposedly, this was back, yeah, we're looking at March of 2020. Obviously, every chart pretty much looks like this. But again, at the top of the screen, top left, you can see the O, the H, the L, the C, open, the high, the low, the close. The low, $6.57, right? So that's the low they took it. Pandemic, shit hit the fan, $6.50. At the time, about $40 million in revenue. Now we fast forward a couple of years later, company's up to 130 plus million in revenue. So you could say, in theory, if the revenue and the value of the business supposedly tripled, and revenue went from 40 million to 130 million, then you can say potential low of lows of 6.5 could triple, which would give us 19.5. And if we come here, see we're sitting here like 19.5, and as you see coming over, I made a couple of circles. You're seeing a lot of action, a lot of resistance and support. Look at these gaps there at around like that 19 and change level. So yes, it's almost like a 50% drop from where we are now, and it does seem extreme. I don't know if it will really drop that much. However, hypothetically, if it does, if we cut these numbers in half, now the company's making $450 million for the year with a market cap of about $1.5 billion. Now it's trading, 3.5 times yearly revenue, and it looks much, much more attractive on paper. So again, I don't think it's going to crash to sub 50. I'm just talking hypothetically. Again, if they crash it down, the lowest of lows may potentially be about 19 and a half. But I'm sure you guys get the gist of what I'm saying. InMode, again, Specs Bundy, I believe your name was. Yep, Specs Bundy. So shout out to him. Make yourself known in the comments section. And, we'll keep an eye on this one. And if you guys have a position in this, or you're looking to take a position, you have it on the watch list, let us know down in the comments section. We'll keep the conversation going. But I'm going to end it there. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, like the video, thumbs up, helps out the algorithm. Subscribe to the channel, means a lot. Love seeing it. And moving forward, like I always say, I understand that markets are rocky, and they're volatile, and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. I want to thank you for stopping by. Have a good day, guys.